The US stock indices sold off on last Friday, dragged down by AI bubble fears due to the announcement by Oracle. But however, very interestingly, the US Wall Street Index, which represents the Dow Jones Industrial Average, as well as the S&P 500, managed to help above our respective short-term pivotal supports level. Secondly, the US dollar continues to remain weak despite the sell-off in the US stock indices, bearing in mind that there's no clear signs of a risk of perspective, and as well as the West Texas crude oil managed to bounce off from a key short-term range support level at around the 57.20 level. Very good morning to all, and welcome back to today's Daily Dose of Market Insights. I'm Kelvin here. I hope that you guys have a restful weekend. Today will be a brand new trading week, which is on Monday, the 15th of December 2025. So as usual, before we jump into the crux of our daily dose, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right. So before we jump straight into today's full suite of the daily dose, we cover all the intraday technical outlook, a refresh of the key intraday levels to look out for in our broad-based cross asset that we cover on a frequent basis. Let's have a quick recap on last Friday and as well as in today's early Asia session on any relevant economic data release or event. So let us start with the state of the US stock market on last Friday first over here. So as you could see on my chart over here is that the four major US stock indices all closed in the red. The S&P rallied at the start of the US session, but can't maintain that momentum, and there was a sell-off. But this sell-off managed to stabilize around the second half of the US session, and it's managed to bounce up from the intraday low that was printed at around 12:30 a.m. Singapore time, which is 6,803 level. So the worst hit was the Nasdaq 100, which down by negative 1.91%, almost 2%. Whereas the Dow Jones Industrial Average managed to outperform, fare much better, but closed still negative at negative 0.5%. And the Russell 2000 is down by negative 1.5%, but still managed to trade above the intra-low that was set at around 12:30 a.m. Singapore time on last Friday over here. So what was the cause of the US stock market, weakness on last Friday was due to a negative feedback loop that has been spread among the semiconductor stocks in the US. And we know that the semiconductor stock in the US has been pretty much sensitive to this AI optimism / AI bubble narrative. So on last Friday, two key stocks were hit pertaining to the AI related bubble fears. One is NVIDIA, down by negative 3.27%. So the reason why NVIDIA was down so significantly on last Friday on an intraday basis, because there's actually a report coming out from China that China regulators or top policymakers are urging Chinese firms from rejecting NVIDIA H2 chips. So still recall that the US administration has finally to allow NVIDIA to actually resell their lower tier H200 chips to the China market, but the Trump administration will want to have a 25% surcharge on that. So despite this approval being granted to NVIDIA, on the other hand, the China authorities is actually forbidding Chinese firms from using NVIDIA H200 chips. So that causes the negative feedback loop into the US semiconductor stocks and dragging the Nasdaq 100, given that the semiconductor stocks has a higher weightage in the Nasdaq 100 composite index. And also, we have this fear pertaining to Oracle as well. So we know that Oracle has a significant doing this kind of AI circular financing deals with ChatGPT or the parent company, or as OpenAI, the parent company, the maker of ChatGPT. So Oracle yesterday, on Friday, it came out with this news flow saying that some data center projects will be delayed for OpenAI into 2028 over here. So Oracle Corporation has pushed back the completion date for some data centers. It's developing for OpenAI to 2028 from 2027, according to people familiar with the work. So the delays are largely due to labor and material shortages over here. So given the fact that this data center delayed by Oracle, and Oracle is also part of this AI financing, circular financing that they have with Oracle, that potentially could derail OpenAI from deploying a much more higher end AI related models going forward into 2028 and even 2027, given that we know that in order to run this AI, more cutting edge AI models, OpenAI need to have much more data center over here. So given that Oracle has kind of delayed their data center build up for OpenAI, that created a negative feedback loop into this AI bubble fields again, and that causing the Nasdaq 100 to sell off much more drastically on last Friday. But what's interesting over here is that despite the sell off in the semiconductor, we call it a segment of the information technology sector in the US, there are a couple of green shots that has formed in other sectors. The financial sector, most of them managed to close in the green on last Friday, the healthcare, and as well as the industrials, and as well as the consumer defensive, which is a consumer stable. So we do not see a rampant across the board risk of behavior in the US stock market, but it's more of an ongoing rotation play, which I shared in my previous daily dose, that market participants now are shifting away from those prior high momentum driven AI / mega cap technology segment of the US market, away from the current laggards that has been taking shape since the start of this year, which is the financials, the industrials, and as well as the healthcare. So if you look at the heat map of the 11th sector of the S&P 500 in terms of the grouping, very clearly what we could see is that on last Friday, the consumer defensive, the consumer cycle, healthcare, and financial outperform the US stock market. And on a 1 week performance basis, they may take it into account the 5-day performance of last week. The basic materials, the financials, and industrial managed to have superior return over the technology and the communication services sector. So bear in mind that the technology and the communication service sector is where the mega cap technology company reside, which also riding on the tailwind of the AI optimism narrative since the start of this year. Both of them are down negative 2.2% and down negative 2.8%, whereas the materials, the financials, and the industrial are up by 3%, 2%, and 1.3% respectively. So a very clear sign that rotation away from the technology and the communication services, which is primarily residing by those mega cap technology stocks that's riding on the AI optimism theme, towards the laggards, which is the materials, financials, and industrials. So that's why the Dow Jones Industrial Average managed to outperform. All right, over here. So now back to the FX market. So over the FX market, we also start to see the dollar weakening as well. So there is no clear signs of dollar strengthening despite that sell-off in the US stock market on last Friday. So the 5-day rolling performance of the dollar as of we are speaking right now, of 15th of December, continues to remain subdued over here. So the weakest dollar pair is the dollar Swiss, which is down by negative 1.4%, followed by the dollar against the euro, which is the dollar is down by negative 0.9% against the euro based on the 5-day rolling performance basis. And if you look at the chart of the US dollar index, taking into account of a general sentiment of dollar weakness or dollar strength, very clearly since the bearish breakdown on ex-post FOMC on 10th of December, a retest at the 50-day moving average, a retest at the close to the 20-day and the 200-day moving average, which is an intermediate resistance level at 99.25. It staged a bearish breakdown below 98.67 over here and managed to remain below 98.67 key intermediate near-term resistance level since last Thursday. And in today's Asia session, there's no clear signs of a bullish reversal candlestick forming on the daily chart of the US dollar index. So i.e., the US dollar index is potentially en route towards the lower limit of this complex medium-term sideways range configuration that has taken shape since the low of 2nd of July 2025, and it got rejected at the upper limit of this medium-term sideways range configuration at the key medium-term resistance level at 100.54 on the 5th of November and on the 20th of November. So next key support level to watch will be 98.03. A breakdown below 98.03 potentially may see further US dollar index weakness to retest the next medium-term support level at 97.21. All right, around 97.21 area. All right, so that's for the US dollar index. From a technical analysis perspective, it's not showing any signs of a bullish reversal, but however, it's continuing to show signs of a weakness as it continues to actually transverse towards the lower limit of this complex sideways range configuration over here. All right, so that's for the US dollar index. So over in Asia, over here, what we could see is that in Asia, the E-mini futures, as we are speaking right now, the S&P E-mini futures is actually up 0.3%. So I mentioned that despite yesterday's sell-off, despite last Friday sell-off on the major US stock indices, the US SPX 500 CFD index managed to help right exactly at our short-term pivotal support level. Later, I'll highlight to you guys what is level again. And indeed, it managed to bounce off significantly in today's Asia session, up 0.25%. As is now trading towards the session high. Very similar to the higher beta Nasdaq 100, managed to bounce off these the 50-day and the 20-day moving average very closely after the retest of it on last Friday, which is up by 0.21% as we are speaking. And if you look at other Asia Pacific market over here, the Nikkei 225 futures is managed to up 0.21%, despite the Nikkei 225 cash index is down by negative 1.5%. Yes, despite, because we know that Nikkei 225 cash market only opened in today's Asia session. So there was no trading action on last Friday. But if you want to take into account of the price action on last Friday, the Nikkei 225 futures managed to actually stage a recovery, and where it recovered also right exactly at our short-term pivotal support zone at around the 50,000, 49,000 zone level. Later I'll highlight to you guys again that level as well. All right. Yes, despite the Asia market is in the red on the cash market, the Hang Seng Index is down by 0.92%. The CSI 300 managed to inch up a small gain of 0.2%, and the Southeast Asia market, the STI is down by negative 0.33%, and the ASX 200 is down by negative 0.67%, but all of them managed to bounce off from their session low this morning, supported by the rebound that is being seen on the E-mini futures, on both the S&P 500 E-mini futures and the Nasdaq 100 E-mini futures as we are speaking right now. And onward to the key data that has been released in today's Asia session will be the China Housing Price Index, and as well as the industrial production and the retail sales figure. So give me it very quickly. So the housing price index managed to dip down further from negative 2.2 previously to negative 2.4% year on year. And also the industrial production and the retail sales figure also came in weaker than expected. So for industrial production for November, market is expecting 5%. It came in at 4.8% and also below 4.9% previously for the month of October. And retail sales was a big disappointment. So market is expecting the same pace of 2.9% as of October, but it came in weaker than expected at 1.3%. So that actually meaning that the economic softness in China's economy has started to be on the forefront again, which represent a deflationary risk environment potentially continuing. So that could also potentially give an urgency for the China top policymakers to have much more stimulus going into 2026 to address this ongoing weakness that is being displayed on the housing price index and the industrial production and the retail sales figure. So bear in mind that the China top policymakers has been very measured in their fiscal stimulus approach, both on the fiscal side and as well as the monetary policy side throughout 2025. So given this potential U-turn on the housing price index, so if you look at the housing price index previously, the year-on-year growth has started to slow down negatively from the start of this year. All right, so previously at the start of this year, it was negative 5%, and the magnitude of that negative growth has started to slow down, which is very positive. But however, on the November print, it managed to actually shape a reversal, a slight reversal from negative 2.2% year-on-year in October. It actually expanded further on the downside to negative 2.4%, and that was also below the, we call it, more than the forecasted amount by Trading Economics. So Trading Economics forecast that amount to be at negative 1.9%. So also the housing market also came in disappointed by the forecast by Trading Economics. So that potentially also put that deflationary risk spiral back into the forefront of the market right now, which means, i.e., the top policymakers likely will have to do more stimulus measures heading into 2026 to address this ongoing softness in the Chinese economy. So later I'll share with you what are the key levels to look out for on an intraday basis on the Hong Kong 33 index, which represents the Hang Seng index. All right, so that sum up the first segment of the daily dose. Now let me move on to the second segment, which will be covering all the intraday technical outlook charts of the cross asset classes that we have, that we cover on a frequent basis. So let me expand my screen over here. All right, so let us start with the FX market. So the euro dollar. So the euro dollar on last Friday managed to trade sideways below our first resistance level at 117.60, but managed to help above our adjusted tightened short-term pivotal support that we have on last Friday at 117 figure level. So no change as we continues to see the euro dollar continues to trade within this minor ascending channel since the low of 21st of November. And the RSI also managed to help above a parallel ascending support level right above the 50 level, indicating that short-term upside momentum still remains intact for the euro dollar. So still using the 117 figure level as my short-term pivotal support, given that the first resistance hasn't broken to the upside at 117.60. Unless we have an hourly close and a bullish breakout above 117.60 later, then I will tighten my pivotal support to last Friday swing low area at this 117.20 level. All right, so for now still remains 117 figure level. Short-term pivotal support on the euro dollar, maintain that bullish bias above 117.60, potentially seek out 117.90 next, which is the 1.236 Fibo extension of this ongoing bullish impulsive upward sequence from the low of 21st of November, and 117.90 also correspond to the upper limit of this ongoing minor ascending channel drawn from the low of 21st of November as well. Only a bearish breakdown below 117 figure level will invalidate today's bullish bias view to see a deeper setback to retest the next intermediate support zone at 116.75, 116.55, which confluence with the minor ascending channel support as well. A breakdown, however, breakdown below 116.55 will trigger a deeper minor corrective pullback to retest 116.15. Intermediate support level that was being defined by the swing low of 9th of October at 9th of December, also confluencing now with the rising 20-day and the 50-day moving average at 116.15. So that's for the euro dollar. Next up will be the sterling dollar over here, or the pound. So the pound was much more weaker than the dollar as it managed to slide further on last Friday due to the rather weak monthly GDP data for October, but managed to help above the 200-day moving average, which confluence with our lower limit of this pivotal support at 133.50 level, 133.50. So still using 133.50 as my short-term pivotal support for today, and also confluence with the lower limit of this minor ascending channel drawn from the low of 21st of November, keeping this ongoing minor uptrend phase intact. However, I have a intermediate resistance level to watch out for today. So that will be this minor swing high area here that was being formed on last Friday Asia session, which is Friday's session high at 133.96 over here. A breakout above 133.96 potentially seek out the next intermediate resistance level at 134.45 in the first step. So 134.45 confluence with the 1.236 Fibo extension of this ongoing impulsive upward sequence from 20th of November minus swing low, and 134.45 also confluence with the minus swing high area of 17th of October and as well as 20th of October over here. Only a bearish breakdown below 133.50 will invalidate today's bullish bias view to see a deeper corrective pullback towards 133.25 and even 132.70 next, which confluence with the 50-day moving average. So that's for the sterling dollar. Up next will be the Australia dollar over here. So the Australia dollar also managed to help above our pivotal support level on last Friday, despite that sell-off in the US equity market. So given the fact that the Aussie dollar has a very strong correlation with the state of the global risk-on, risk-off sentiment from global stock market. So we managed to see a rebound at the middle part of the US session on last Friday, surviving this at the 66.30 short-term pivotal support level. So this is indeed a pivotal support level to maintain our ongoing bullish biasness in the near term. So using 66.30 as my short-term pivotal support level on the upside, today I have an upside trigger level at the 66.60 level, which was the last Friday US session retest of it during the middle of the session before it traded sideways again on last Friday at the 66.30 level. All right, you could see very clearly over here. So using 66.60 over, let me put it in writing so that you guys could have a better view of the charts. 0.66, 0.6660. So that is something like an upside trigger level. A breakout above 0.6660 will potentially seek out the next intermediate resistance at 66.90 next, which is very close to the minor swing high of last Thursday at 11th of December, and as well as the minor swing high area of 17th and 18th of September this year at 66.90. Only a bearish breakdown below 66.30 will invalidate this recovery signal that we are expecting for today to see a deeper minor corrective setback or pullback to expose the next near-term support level at 66.05/65.80, which confluence with the minor ascending channel support drawn from the low of 21st of November. So that's for the Aussie dollar. Next up will be the dollar yen. So the dollar yen reacted negatively right exactly at our tightened short-term / adjusted pivotal resistance that we have on last Friday at 15610. So this is indeed a pivotal resistance level to maintain our near-term bearish bias view for the dollar yen as we head into this week key risk event, which is the outcome of the Bank of Japan monetary policy on Friday. So we'll talk more about that as we head closer to the BOJ meeting on Friday. So for now, 15610 will be indeed our short-term pivotal resistance level, given the way how it got rejected on 2 occasions, on 11th of December and on 12th of December. Maintain that near-term bearish biasness on the dollar yen using 15610 short-term pivotal resistance, near-term support level to watch, which confluence with 8th of December minor swing low and 11th of December minor swing low at 14590. Only a breakdown below 14590 will potentially expose more near-term weakness on the dollar yen towards the next near-term support level at 15440, which is the minor swing low of 5th of December and as well as 14th of November, and confluencing now very closely with this rising 50-day moving average. All right, only a bullish breakout above 15610 and an hourly close above it will invalidate today's bearish bias view to see a squeeze up towards 15660, maximum 15715, which is the swing high area of 10th of December that confluence with the important minor congestion area of 20th of November and 24th of November, where the bulls previously got rejected there as well. So that's for the dollar yen, and also sum up all the intraday technical outlook on the 4 major US dollar pair. Moving on, next will be the outlook on the global stock indices, starting from the Asia Pacific region, which is firstly the Hong Kong 33, representing the Hang Seng Index. So the Hong Kong 33 managed to shape a rebound, and this rebound took shape exactly above our pivotal support that we highlighted on last Friday at 25,445. So still no change, still using 25,445 as my short-term pivotal support level, given the fact that it continues to manage to stage a bounce close of it. So the minor swing low for today right now, so this will be kind of an intermediate support level at 25,630, all right, which is the minor swing low for Asia session on last Friday US session. Intermediate resistance level to watch out for will be at 25,890 level. So this is something like an upside trigger level for the potential boost to stage a further rebound. 25,890, which is also confluencing with the 20-day moving average and also the level where previously the minor swing low area was formed on Friday Asia session before this black Marubozu candlestick kick shape during the US session, in line with the sell-off on the Nasdaq 100. So 25,890 intermediate near-term upside trigger level. A breakout above this level will see a potential retest at the 26,140 level on the Hong Kong 33, which is the minor swing high area of 5th of December and 8th of December, and converging very closely with the 50-day moving average as well. Only a bearish breakdown below 25,445 will invalidate today's bullish bias view to see a further slide to retest the critical 21st of November's minor swing low area at 25,120. All right, over here. So there's a typo error, 25,120. All right, my apologies, 25,120. So that's for the Hong Kong 33. Up next will be the Nikkei 225, or the Japan 225 represents Nikkei 225. So again, Japan 225 staged a sell-off on last Friday, but managed to see a bounce right exactly at our pivotal support area, short-term pivotal support area that we have for the entire of last week, as managed to still trap in this minor sideways range configuration since the high of 4th of December. So 50,150 / 49,960, which is the lower limit over here, and also confluence very closely with the 20-day and the 50-day moving average as well. So no change, still watching very closely this 50,150 lower limit, 49,960 as my short-term pivotal support level. Still maintain that, still have a bullish bias for today, as it may continues to push up towards the upper limit of this minor sideways range configuration that is still trapped since the high of 4th of December over here. So upside trigger level in the near term will be at 50,530 over here, before that bearish Marubozu candlestick take shape that was at the start of the US session on last Friday, 50,530. All right. So a breakout above 50,530 will potentially see a push up to retest the key minor sideways range resistance level at 50,985. Only a bearish breakdown below 49,960 will invalidate this push up view towards the upper limit of this sideways range and see a deeper minor corrective setback towards the next near-term support level at 49,400, 49,085 in the first step. So that's for the Japan 225 representing the Nikkei 225. Onward next will be the Germany 30 representing the German DAX. So the Germany 30 did that pullback as expected on last Friday that we mentioned, but managed to shape a bullish reversal candlestick at the 12 a.m. mark Singapore time, right exactly at the upper limit of our short-term pivotal support zone, 24,190 / 24,125. So still no change, still maintain that bullish bias since we have a bullish reaction of it. And also price action also managed to bounce off right exactly at the lower limit of this ongoing minor ascending channel drawn from the low of 21st of November. So using 24,000, pardon me. So using this 24,190 as our short-term slash, okay, let me do a proper one, do the adjustment. Okay, so using 24,190 / 24,125, short-term pivotal support zone on the Germany 30 CFD index, still maintain that bullish bias. Next resistance level to watch will be 24,395, which was rejected on last Friday. A breakout above 24,395 potentially take us up towards the next intermediate resistance at 24,560, 24,620, which is the current minor congestion area of 3rd of October and 10th of October, and also a Fibo extension confluencing cluster level as well. Right, only a bearish breakdown below 24,125 that will invalidate today's bullish bias view on the Germany 30 to trigger off a much more pronounced minor corrective pullback scenario to retest 24,000 level, which is the minor swing low area of 10th of December and 11th of December. A breakdown below 24,000 level will see a deeper setback towards 23,860 and even 23,670, which confluence with the 20-day moving average. That's for the Germany 30. Next up will be the S&P 500. So still recall that S&P 500 on last Friday, I do mention that after hitting our resistance level on 48,770, we do expect a pullback, and that pullback indeed takes shape right exactly at the retest and hot on the 48,450 level before staging a minor bullish reversal, which is the former all-time high. So no change, given that the clearance, it still can't clear above 48,770. So I do not want to use a pivotal support to be so tight at 48,450 for today. So my pivotal support will still remains the same at 48,125 as per Friday. So as long as 48,125 hold, potentially we may see a recovery on the US Wall Street 30 for today. Clearance above 48,770 will give much more higher odds of this recovery to resume its bullish impulsive upward sequence towards the next intermediate resistance zone at 49,250/49,280, which is a Fibonacci extension cluster level, and as well as the intersection of the upper limit of this medium-term ascending channel that is still in play from the 23rd of May 2025 low, and the lighter blue upper limit line, which is the minor ascending channel upper limit from the low of 21st of November. Only a bearish breakdown below 48,125 that would invalidate today's recovery scenario on the US Wall Street 30 to see a deeper minor corrective pullback towards 47,820, 47,560, which is close to the minor swing low of 10th of December that confluence with the lower limit of this minor ascending channel drawn from the low of 21st of November. So that's for the US Wall Street 30 representing the Dow Jones Industrial Average. Next up will be the S&P 500. So the S&P 500 managed to squeeze down over here, but the way it squeezed down, it managed to help right exactly at the lower limit of our short-term pivotal support zone that we have on last Friday, 6,807 over here, 6,807. So with that, we're still looking for a potential recovery for today, given the fact that the hourly RSI has managed to exit up from the oversold level on last Friday as well. So right now, as we are speaking, the index managed to stage a bounce of 0.15% at 11:34 a.m. Singapore time. So using 6,830/6,807 pivotal support zone, that potentially on the S&P 500 that could seek out a potential minor recovery for today. First resistance level to watch will be the breakdown on last Friday that formed this bearish Marubozu candlestick, which is at 6,885 over here. So let me put it in writing. 6,885. All right, 6,885. A breakout above 6,885, potentially seek out a retest at the current all-time high at 6,930 that was formed during 29th of October and 30th of October this year. Only a bearish breakdown below 6,807 will unleash a deeper minor corrective pullback scenario to revisit 6,780/6,760, a breakdown below it, which is also breaking down below the 20 and the 3-day moving average, will potentially damage this ongoing minor uptrend phase that has been in place since 21st of November low to seek out further weakness towards the next intermediate support level at 6,710. So 6,710, if you do the Fibonacci retracement of this ongoing uptrend, minor uptrend from 21st of November low all the way up to the 12th of December Asia session high, that confluence with the 50% Fibonacci retracement as well. Right, so that's for the SPX 500. Lastly will be the Nasdaq 100. So the Nasdaq 100 underperformed and broke below our Titan pivotal support that we have for last week at 25,455. Sell off, but the sell off managed to be contained at the 20-day and the 50-day moving average thereabout, which is at 25,165. So flipping to a neutrality stance for today. So very important, if you look at the RSI hit the oversold level on last Friday and it starts to shape a bullish divergence, all right, indicating that we see same low on the price action, but a higher low on the RSI and exit from the RSI at the oversold level, indicating that last Friday downside momentum on the intraday basis has started to ease off. So for now, maintaining a neutrality phase, neutrality stance first, a neutral stance between 25,165, upper limit of the neutrality zone 24,455. So a breakout above 25, pardon me, a bit of time twisting, neutral between 25,455, which was last Friday short-term pivotal support, now turns into a critical pullback resistance. Lower limit of that neutrality zone will be 25,165, which confluence with the 20-day and the 50-day moving average. And I don't want to have a bearish bias because of that bullish divergence that's being flashed out on the RSI, and also other major US stock indices are still holding above their respective key short-term pivotal support level, which I expressed earlier on, on the S&P 500 and the US Wall Street 30, that is representing the Dow Jones Industrial Average. Only a bullish breakout and an hourly close above 25,455 will reinstate the bullish bias on the Nasdaq 100 to revisit the stubborn minor swing high area of 8th of December at 25,760/25,830 in the first step. Only a bearish breakdown below 25,165. We see further weakness towards 25,920 and even 25,580 next. 24,580, not 25,000, pardon me. 25,480, 580 next. Right, 24,580 right over here. So that's for the Nasdaq 100, and also sum up all the intraday technical outlook on the major stock indices. Let us now move towards the commodities market with gold XAU/USD. So gold on last Friday hit our bullish bias resistance at 4,340, pardon me, 4,355 before shaping that pullback, and that pullback exactly shaped a bullish reversal hourly candlestick at the 12 a.m. marks last Friday time before staging a bounce, and in today's Asia session, a clear bullish reversal has been taken shape as it's up after a positive follow through after that bullish hourly candlestick, hammer candlestick that was seen on 12 a.m. on last Saturday Singapore time. So as we are speaking right now, gold is up 0.64% as of 11:38 a.m. Singapore time. So with this bullish reversal and a positive follow through in today's Asia session as we are speaking, I will tighten my short-term pivotal support level from 4,205 to 4,267/4,243. This is the support zone here, which is the clear minor swing high area. 1st of December, 5th of December got a bullish breakout on last Friday and managed to help above this pullback support before shaping that bullish reversal as we're speaking right now. So maintain that bullish bias, 4,267, 4,243, adjusted upward short-term pivotal support zone on gold XAU/USD above 4,355, potentially seek a retest at the current all-time high level at 4,380, which is the 20th of October high over here as it continues to trade in a medium-term uptrend channel since the low of 28th of October above 4,380, pardon me, above 4,380, potentially seek out the next intermediate resistance level at 4,430, 4,440, which show confluence with the upper limit of this medium-term ascending channel and a Fibo extension clustering level as well. Only a bearish breakdown below 4,243 will invalidate today's direct bullish bias view to see another round of a choppy corrective pullback sequence unfolding again to retest 4,205, maximum 4,155, which confluence with the lower limit of this medium-term ascending channel that I drew from the low of 28th of October, and so confluence with the rising closely with the rising 20-day moving average as well. So that's for gold XAU/USD, maintaining that bullish bias with an adjusted upward short-term pivotal support zone at 4,267/4,243. Lastly will be the West Texas crude oil over here. So the West Texas crude oil managed to survive at the lower limit of our short-term pivotal support zone, 57.54, 57.21, which is also the minor sideways range configuration that has been in place since 25th of November over here, right, as it's trading inside this minor sideways range. So still no change. Price action on the hourly RSI continues to flash out a bullish divergence. So I could see over here, there's another higher low that's being formed during the US session over here, indicating that the downside momentum has started to ease off. So still maintaining that bullish bias on the West Texas crude oil for it to float up towards the middle part of this minor sideways range configuration that has been in place since 25th of November low. So first resistance level to watch for today in my bullish bias towards the upper limit of this sideways range will be last Friday high at 58.22 over here. Above 58.22 potentially exposes 58.70 and 59.18, 59.18, which confluence with the 20-day moving average, acting as a similar resistance area as well. Only a bearish breakdown below 57.21 short-term pivotal resistance level, and also a bearish breakdown below this minor sideways range support level potentially seek out further weakness towards 56.80 and even 55.80/55.55 next. So that's for West Texas oil. And that sum up all the intraday technical outlook on all the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for as we head into the European session? So European session will be very quiet. So in the US session, we only have one key data to take note of for those who have interest in the dollar Canada. And the Canada cross pair rates will be the core inflation rate for Canada out at 9:30 p.m. Singapore time. All right, then heading into the US session, it will be a very quiet session except for US Fed Williams speech over here. So Fed Williams is also an influential US official. So bear in mind that his speech will have a significant impact on the broad-based cross asset classes. So that will be at 11:30 p.m. Singapore time today. And thereafter, there will be a quiet session heading into the early Asia session on Tuesday at 6 a.m. Singapore time. We have the release of the Australia S&P Global Flash Manufacturing PMI data and Services PMI data for the month of December. So that could potentially influence the Aussie dollar, the Aussie dollar crosses, and the ASX 200 index over here. And followed by 7:30 a.m. We also have another Australia Tier 1 data, which is Westpac Consumer Confidence Change data for December out at 7:30 a.m. and followed by 8:30 a.m. before the start of our daily lows at 11 a.m. So key Japanese Tier 1 data will be the manufacturing PMI flash data for December and the services PMI flash data for December. So for the services PMI, market participants or trading economic forecast is still in a expansionary mode, but slightly below previous November print of 53.2 to come in at 51.6. So that could potentially influence the dollar yen rate, the yen crosses, and as well as the Japan 225 CFD index representing the Nikkei 225. That sum up today's Daily Dose of Market Insights. I'm Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.